In this video, I'm going to show you how to do top-down analysis, starting from the higher time frame and working your way down to the lower time frame. Understanding what is happening on the higher time frame is really crucial because the higher time frame controls what happens on the lower time frame. If you watch this particular swing here that price has been making since February up until June, you see that price has been bullish. So the retracement that price has been doing, you see that price has been respecting fair value gap. If price makes an aggressive push like this to the upside, it will leave a gap on the higher time frame and trade it down into that fair value gap to fill it up before making another expansion to the upside. You can see here price respected this fair value gap and price also respected this fair value gap. Let's use this particular one to do a top-down analysis. So here you can see a fair value gap here. What exactly is fair value gap? Fair value gap is three candle formation where the second candle has a gap, okay, where there is a gap between the first and the third candle. This is the first, this is the second, and this is the third. You can see that there is a gap between this particular third candle and the first one, this gap here. This is what is known as fair value gap. So now I'm going to map this out. I'm going to map this fair value gap out from here up until this one here. Okay, so now we've spotted this fair value gap on the higher time frame. We are from this weekly time frame, we are going to go down to daily time frame. So let me go down to daily time frame. So this is our daily time frame. This is where we spotted on the weekly time frame. I can see here that we cannot really spot a fair value gap here, but if we should look closely, you will see that there is also a fair value gap here very close to this one. You can see here, draw this out. Okay, we also have this here. You can see there is another fair value gap here inside the fair value gap we spotted on the weekly time frame. We can also spot another one on the daily time frame. Okay, now let's go down to the 1 hour time frame. We spotted this on the daily time frame. We are working our way from the higher time frame down to the lower time frame. From this daily time frame, I'm going to go straight to 1 hour time frame to see what price is doing at this point. You can see this is where we spotted on the weekly time frame and daily time frame. So here on 1 hour time frame, you can see how price reacted of this zone. Now pay attention to this. Pay attention to how price reacted of this zone. This is the first leg of the fair value gap, right? Price reacted of this zone here, right? The first time, acted as if it was going to reverse from here to the upside, but traded down to take out liquidity here. So this particular, the first move here was a liquidity, was an inducement, price trying to induce people, traders believing that the market is going to push from here to the upside, right? Now traded down aggressively to the downside into the second leg of the fair value gap we spotted on the daily time frame. Have you seen? So now when price traded down into this one here, it started making its way up. I would have considered this a shift in market structure, but you can see how this particular candle closes around here, right? This was just a liquidity sweep. So price retraced inward again. Pay attention to how price reacted of this zone here. Then from here it started making its way up, but this is where we can spot a clear shift in market structure here. So this is a clear shift in market structure here, or a change of character. You can call it a shift in market structure, you can call it a change of character. So price change its direction from here, and from this point here, you can see that the market has been making its way up. Let's look at it from here. Traded up, a retracement, piling up liquidity here, drop down to sweep the liquidity here, has been making its way up, another expansion to the upside, sweeping liquidity here and this one, then inducing another liquidity here, dropping down to sweep this liquidity, started pushing to the upside. So this area, we spotted it on the higher time frame. Okay, so the higher time frame controls what happens on the lower time frame. So if you don't want to pick an entry on this time frame, you can go down to 5 minutes. I don't want to go down to 5 minutes here because the data here is just too much. If I should go down to 5 minutes, I will not really see this. So let's go over to weekly time frame again and spot another point of interest that we can use to work our way down to the lower time frame to look for an entry. Okay, so here, this was the first one we spotted, right? And now, can you see another fair value gap here, right? This is another one here. Now, let's draw it out from the first leg to the second one here, to the last one here. We map this out. Okay, so this is weekly time frame, right? Let's go down to daily time frame. Go down to daily. We spotted a fair value gap on the weekly time frame, but here on the daily time frame, you can see that there is no gap here. Have you seen? There is no gap here, but price reacted of this zone, which means what happens on the higher time frame has more impact on the lower time frame. Okay, so now we can see that there is no fair value gap here, but price reacted of this zone here. So spotting this on the higher time frame, we want to see how it's going to react on the lower time frame. Now let's go down to 1 hour time frame to see. But first of all, let's understand this. Here you can see that there is liquidity here. There is an old low here, right? There is an old low here. We map this out. So if price is coming into the fair value gap we spotted on the higher time frame, at least price needs to take out liquidity, right? And this old low serves as liquidity. Okay, this old low here serves as what? Liquidity. So price traded down, taking out this liquidity. After taking out the liquidity, we saw this push to the upside. Okay, now let's go to 1 hour time frame. Okay, so here on the 1 hour time frame, we have this old low here. The price traded down into sweeping this liquidity here the first time, traded back up, and look at what happened here too. There was also another fair value gap here that price respected, traded down to take out this liquidity. But the confirmation signature, or the confirmatory signature we are going to look for, is a shift in market structure. Okay, so now price gave us a shift in market structure around this area here. Price gave us a shift in market structure here. Have you seen? Or a change of character. You can call it a shift in market structure or a change of character. Price gave us a shift in market structure here after sweeping this liquidity here. After this sweep of liquidity, it changes direction to the upside here and drops down into this other block here, started making its way up. So from here now, we saw this aggressive push to the upside. This was Friday retracement, but you can see here that after this shift in market structure from the higher time frame points of interest we spotted, that price respected that point on the lower time frame and started making its way up to this zone here. So now this is where price is actually reacting off. Okay, now if we should go to daily time frame, you also see that this point that price is reacting off is also a fair value gap. Have you seen? It's also a fair value gap here and here. Price traded into this fair value gap, rejected this fair value gap. Okay, so this is actually how to do your top-down analysis. You're working your way from the higher time frame to down to the lower time frame. Okay, and I know some people will ask me how you can pick an entry from here. If you want to pick an entry from this particular time frame, you want to wait for price to give you a shift in market structure here. Okay, you want to wait for price to give you a shift in market structure here. From here, you can, let's say you see price dropping down to this zone, you can just pick an entry here. Your stop loss should be below this low here, right? Below this low, and you target maybe this first high here, because definitely price will want to take out this first high here. This is the first draw on liquidity, taking out this high. So you can see how price reacted off this zone after this shift in market structure. Working your way from the higher time frame down to the lower time frame is going to help you a whole lot, because let's say this particular one here, this other block here, if we should go down to 15 minutes, you see that price has also given us a shift in market structure here, but that's going to be like, it's going to be a whole lot for you guys. So this is how to do top-down analysis, looking at the higher time frame, looking at points at price, or looking at areas that price may likely respect on the higher time frame, mapping it out and coming down to the lower time frame to see how price is going to react off that zone. Okay, so I hope this video was helpful. If you're new to my channel, please consider subscribing, like the video. Thanks for watching. See you in my next video. Bye.